This is the Friday, August 18th, 2017 version of the Market Plus segment. Joining us now is John Roach. John, welcome back.
Thanks, Mike. Great to be here.
Hey, we're glad to have you. And I wanted to get in a little more on your thought process that we were kind of touching on the program. And I think there's a question here that'll lead us right into that. And this is from Chad in Dunbar, Nebraska. Chad notes that corn is getting oversold. Could we see a rally the last half of August? So we got two questions there. How oversold is corn? And can we rally it in the next 2 weeks?
It's well oversold. I mean, we've gone basically from the high of the year to the low of the year, or virtually. And so it is well oversold. But trying to get a rally between now and the end of August is hard. As we talked on the show, there's still a lot of corn that farmers own that they normally wouldn't own. The prices never got high enough, and when they were strong, we really had troublesome weather, and it's awful hard to sell something when your crop in the field is suffering. And so we have more people holding on to old crop inventory. We know from last year's big crop that there were lots of bushels out there, and we have a lot of what we call price later contracts that will terminate on August 31st. And so there will be a flush through the system, I'm afraid, just as there was last year. We were at the Farm Progress Show last year in Boone, Iowa, and we had farmers, I mean, just one after another after another. I mean, they were so worried and so concerned, and we printed the low on the second day of the show. And so I think it was the second day of the show. We didn't know it was the low, but as it turned out, that's what it was. You have to get everybody washed out of the market, and you have to get everybody completely demoralized and just give up, and that's when you print a low. I don't think we can get that done by the end of August, but I think we could get it done right at the end of August or maybe at the early part of September. And then I think we could have a nice little bounce back, because I think there'll be very little for sale after that. And I think there'll be a lot of users that are trying to get their hands on inventory.
Now, do you think, we know that the Brazilians grew one heck of a second crop, their safrinha crop of corn. Do we have to get them largely sold in these next 2 weeks as well? Are they working on that as we sit here today?
They're working on it hard.
Okay.
I mean, the exports coming out of Brazil are big, and so that's being accomplished.
Okay.
What it really says is they will have grain inventory available for the world market for a little longer than they normally do. They normally run out somewhere out here, and depending on the year and their crop, September, October, November, they normally run out. They may have to run in toward the end of the year, maybe before they get in that position this year, and then they may be restricted actually from some of their shipping capacity, and it may still be moving some inventory. But there'll be a point when they run out, and then at that point we become the big market, and particularly for corn and certainly for soybeans, and then we see the markets come back after that. So I think there'll be a good recovery that'll come early in the harvest season this year. And if I were a grower, I would wait a little bit. I wouldn't rush out there and try to sell something thinking I'm going to get a better price than what it might be in 2 weeks or a month. I'll take my chances and sell when I have to.
Okay. Our next question is from Chad in Nebraska. Thanks, Chad, for two questions. Chad wants to talk a little bit about Kansas City wheat, and we talked on the program. That's been not a very pretty chart to look at, but he wants to know, will Kansas City wheat rally back to try and buy acres for this fall, or is this it for wheat?
Well, I don't want to say this is it, but I don't really think that that it will rally back to try to buy acres. I think we'll struggle to get the wheat acres that we had last year. It's just not been a profitable crop, and here we are again not being a very profitable crop. And so my guess is we're just going to lose some of these wheat acres until this whole situation changes. But we will get a recovery back. Again, we had the market clear up at the top with the weather scare and the speculative buying going on, and farmers unloaded into that market. And now we're on the other side of it with the specs getting out of their long positions and the farmers waiting. And I think we'll get bounces.
Do you think we're going to hold this support in here, or is there maybe a little bit more downside ahead of us?
I think we could hold in here. I mean,
okay.
We're cheaper than where we really need to be. We've already had the specs get short the market, so I think we could hold in here any place. We've had a buy signal on, and we have 3 of our 4 key market indicators saying buy now. Now, and I've got to tell you, we've had it on for a couple of weeks. So,
Okay.
So that starts kind of early in the, but when you get a buy signal that lasts this long and you have all the components lining up, that's when you have to not be a seller of wheat. Give it an opportunity to bounce.
Do you remember offhand which one component of your the things you watch isn't clicking?
We don't have the specs short enough yet.
Okay. Okay. So we
may be very close to that on the after I haven't been able to look at all my data. I did look at the commitment to traders report, but so we may have already clicked the fourth one in. I don't know that yet.
Okay.
We'll know on Monday.
Very close. All right, so next up, we're going to turn to Nebraska, or Kendall, also from Nebraska. Kendall's asking on Twitter from KSV Farm. This is it's kind of an interesting question. Do you think the USDA raised soybean yield? They went from 48 to 49.5 last month, so they could raise acres and possibly reduce yield in the coming months to set the market down softly. Is it all part of a grand scheme?
No, I don't think so. However, the USDA did rejiggered how they calculate their production estimates on both corn and beans, and so we may be looking at something different out there. But typically, there is a formula, so to speak, and I think we give the USDA too much credit for thinking outside of the box to think that they're adjusting those numbers so they can adjust them again later. No, they're following formulas, and I don't believe the conspiracy talk about yields and stuff like that. If you meet the people who put together the numbers, you'll find out most of them are farm kids and they're solid people, and they're giving you the very best estimate they have based on the statistical analysis they've done over the years. And the reason that everybody pays attention to them is because they're very good. And so we always are a bit cautious to argue with the USDA. But remember, when the USDA gives us a number, they think from that day forward that the weather's going to be normal. And as we know, normal is a hard thing to really get your arms around. Some people fare better than other people, and so the yields from the day they give us the estimate on forward are going to be subject to that weather difference and to the errors that are in their systems.
Okay. Next question, Jeremy in Lanark, Illinois, on Twitter at jflickema wants to know, or he noticed actually, with the carryout staying the same, carryout isn't shrinking from year to year, according to the USDA, why are the spreads not getting wider? Why haven't we built out to a full carry situation by the end of next year?
Well, there's another component of that if you take a look at the basis. And the basis values have actually strengthened on corn here over the last 3 weeks. And so what it really tells you is there's not enough corn moving to push the spreads out to a larger carry. In order to get that to happen, in order to get the spreads to push out to a wider carry, you have to have movement of grain on the front end. And so typically that'll take harvest or something, and it may actually happen here as we flesh through some of this delayed pricing corn. We may put the pressure on the front end and not so much pressure on the back end. Now, if you go a little bit further out and you take a look at the 2017 versus 2018 and 2019, the 18 and 19 corn has held at a higher price level. So we actually have moved those spreads if you look from year to year. But like to go from December to July, we haven't moved that spread because we haven't had enough pressure on the cash market.
Right. Market doesn't build the carry.
The front dips away.
Right.
The front falls away from the back months.
Yes. Carry is created as the front falls away. But now that raises, I think, an interesting point. Basis has been getting stronger, particularly for the last 2 weeks in August. I mean, this is one of the stronger basis periods we've had on a national basis average. With the possibility that we could see more weakness ahead, would this be a point for growers to unload some physical grain and then just re-own that December futures contract outright?
Possibly. I mean, if let's say that as you're talking about inventory that's in the bin,
right,
and you've held that inventory now for months, and you're saying, I really don't want to give up on this. I think this is, you can own that same inventory on paper in Chicago, and you could sell, let's say as an example, 5,000 bushels out of the bin and go buy 5,000 bushels of July futures and move your inventory into Chicago, take it out of your bin, turn it into paper. Now, obviously, if the market goes up, that'll be a good move. If it goes down, it'll just add more misery to the problem you already have. Because the markets can go both directions. But I think if you're in a position that you can afford that kind of risk, I think it makes pretty good sense. But make sure you can afford the risk and you understand what you're doing, because the markets are notorious at squeezing you out emotionally. You bought the July corn, you were going to hold it to next June, but the market squeezes you out in September because you get more margin calls. So you have to be able to handle the emotional component as well as the financial component.
And check with your banker.
Make sure you have plenty of money.
Yes. Final question for you. Denny in Washington, Iowa, down in southeast part of the state, wants to know, he's on Twitter at DV959, what's your take on the USDA using the third highest ear weight in history for their August yield calculations?
Well, that goes back to what we were talking about earlier, and that is that the USDA says from here forward, we're going to have normal weather. And so if you look at the crop ratings, the percentage of the corn that's rated good to excellent is about what it's been in the average of the last 5 years. So you have average ratings, and so if you're a mathematician or a statistician, you would expect that you might have pretty close to average ear weights, although they might be a little bit heavier because of genetics or because of particular conditions. But it's a first number. And they will improve that number as we start to rely more upon their in-field surveys.
Okay. Now, before we let you go, John, we do like to take questions from college students. And folks, we have come to our final question from Iowa State University ag students. So we would encourage all of you, we need you to send in your questions. If you're an ag markets or risk management track at the University of Minnesota and you've got a question for an analyst, or if you're at Purdue or Indian Hills Community College, send us an email at markettomarket@iptv.org, and we'll talk about getting your video to us so you can ask our analysts a question directly. So, John, before we let you go, here's our question to you from an Iowa State student.
Do you see cash rent prices going down in the future?
Answer now? No.
You bet. Yeah.
No, I don't really see them going down. I hear them talking about going down, and I see people trying to be able to pull them down, but I'm not hearing very much of it.
No, and that's true of pretty much everybody I've talked to as well. There's that constant push from the producer, but landlords haven't been willing to give much yet, it sounds like.
This may be the end of that. Farmers have been really hurt financially in these past 2 years, and it's really biting in this year. And so we may well see some farmers walk away from some farms, in which case then rents will normally would tend to come down. But there still seems to be people who have enough equity or enough courage that they step up and rent the ground. So
write the big check.
Write the big check. So it's I don't see them coming down very much.
All right. Well, John Roach, thank you so much for taking the time to talk to us this week. We always appreciate your insight.
Thank you very much.
Join us again next week when Darren Newsom will sit across from me at the Market to Market table, and we'll look at how farmers are squaring off against state officials over hay in roadside ditches. Until then, thanks for watching or listening. I'm Mike Pearson. Have a great week.